A new survey commissioned by a labor group shows Americans are upset with banks and the way that they've responded to the housing crisis. People who watched banks get bailed out are now asking, where's the help when they need it? Unit 5's Lisa Parker reports.
The news was huge.
Loud cheers on Wall Street today,
as were J.P. Morgan Chase's third quarter earnings, credited last week with pushing the Dow over 10,000 for the first time in a year. But what's good for the financial world is sometimes hard to reconcile in the rest of the world, as foreclosures and unemployment continue to soar.
The exposed brick in here is another big selling point.
Take the case of Chase customer Del Phillips. By his account, a good customer.
I was the Susie Orman A student and had all my ducks in a row and low credit card debt.
But unemployed for 10 months, Phillips joined the ranks of homeowners still making their mortgage payments but blowing through all of their savings. He turned to the federal Making Home Affordable program to get his loan modified to a lower payment.
4 to 6 weeks came and went. I heard nothing, so I called again. And they couldn't even confirm that my application had been received because they had apparently received so many applications.
5 months into that request, Phillips says he got the bad news. Chase said no, because his hardship is not of a permanent nature.
We didn't have an emergency in this country of people going on long-term disability. We had an emergency of people losing their jobs and thereby losing their homes. That's the problem.
We see this all the time with loan servicers.
Ask counselors at Neighborhood Housing Services of Chicago.
Their PR executives are very good at saying that they're committed to implementing the president's plan, but when you talk to the minimum wage people who answer the phone, they have no idea what the terms of the president's plan are. They issue denial letters that have no relationship whatsoever to reality.
They say the reason given Phillips for the denial is improper and point to the government's own guidelines, which list as the first example of a hardship a reduction in or loss of income that was supporting the mortgage.
We work with servicers and we get told, no, this person's not eligible, in direct contradiction to the president's plan. And nobody seems to care, and there doesn't seem to be any way to fix that situation.
But it now appears a growing number of people are coming up with a fix of their own, and it's a controversial one. Referred to as a strategic default, it involves homeowners, many who have never missed a single mortgage payment.
Also called jingle mail, for the cold, hard logic of people who are mailing in their keys because they owe more to the bank than the home is worth. A study released last month by credit reporting agency Experian estimated a fifth of troubled mortgages now involve people who could pay but walk away. For its part, Chase says it is committed to helping, beginning modifications on more than 260,000 loans. The spokesperson says while the company did make money in its investment business last quarter, it also reported a $3 billion loss related to unpaid mortgages. For now, Del Phillips says he won't walk away from his mortgage, but will try a short sale selling for less than he owes. His hopes for help vanished, he says, along with all of his savings. Lisa Parker, NBC 5 News.
The iconic kitty